Okay, first of the palm oil stocks, Astra Agro. So sales, a little bit disappointing, flat 0% versus our forecast 10% because the palm oil price sort of stabilized in the second quarter, but it didn't rise, but it is now rising in the third quarter. In fact, it's jumped significantly. So we expect the sales will bounce up in the third, fourth quarter, and that is about 11% growth over the next 12 months following the trend. Cash flow is much better though. You can see from negative last year and then 200 billion. This is 12 months. In the first quarter, we're now up to almost 1 trillion as of the second quarter. Investment spending is coming down, so with our sales growth and lower investment spending, we get 1.7, almost double the cash flow, free cash flow into the next 12 months, which would look like this. So cash flow coming back up pretty fast, and then that's having a nice impact in the balance sheet. So the debt was 5.8 trillion. They had this like post rights issue, debt 5.9 all the way back to 5.8. But in the second quarter, that's come up to 4.5, and with our cash flow forecast and no dividend, that would be at 2.8. So a big improvement in the net debt. The profit doubled, 13 to 26, but that's a tiny number, so it's not a big difference. The cost ratio is still at 92%. It's at 90% for 12 months, but we think it's coming up. So with higher prices, you can see the cost ratio average is starting to rise, and we're using 88% for the next 12 months, so that would be a doubling of profit to 1.2 trillion. And then here's the valuation. So a higher cash flow with lower investment spending, 1.6% valuation. We've improved the discounting a little bit because the debt is starting to improve significantly, and that gives a target price now, a higher target price of over 30,000. So big things ahead.